I got a message from one of my students the other day. He said, I built my strategy based on ICT. My backtests look amazing. But when I go live, everything falls apart. I take the exact same setups. Yet the results are totally different. Why? And you know what? If you've ever felt the same way, you're not alone. Almost every serious trader hits this wall at some point. Let me give you a real example. That same student sent me his backtest. He was trading a simple 5-minute strategy, with higher timeframe confirmation. He backtested it on Euro, very clean, very structured. His results were great. About 70% win rate with an average risk to reward 1 to 3. But when I looked at his live statement, entries were late, exits were early. And at one point, he even took a trade without a real structure break. So what happened? The system was the same. But his behavior was different. And that's the key point here. Most of the time, the problem isn't your system. It's how you execute that system in live market conditions. So let's break down why this happens. Reason 1. In backtesting, there's nothing to lose. No real money, no stress, no time pressure. You can replay an entire month of price action in just a few hours. But in live trading, every tick feels real. Your money, your emotions, your time. When your brain senses real risk, it goes into protection mode. That's when you start entering late, exiting early, or hesitating when you shouldn't. It's not the system failing, it's your psychology reacting. Reason 2. No external distractions in backtesting. During a backtest, no one calls you. Your internet doesn't drop, and the power never goes out. But in live trading, real life happens. A phone rings, you step away for a minute, and by the time you're back, the setup's gone. These small interruptions break your rhythm, and that can affect your performance more than you think. Reason 3. In backtesting, setups appear fast. In a backtest, one setup ends. You hit play, and boom, the next one appears. But in real time, you might wait hours for the next valid opportunity. And waiting is hard. You get bored, you lose focus. And that's when you start forcing trades just to feel active. You need to accept the silence of the market. Sometimes, not trading is the best trade. Reason 4. No FOMO during backtesting. In backtesting, when price explodes upward, you calmly say, okay, that's where it moved. But in live trading, your brain screams, get in now! You're missing it! That's FOMO. And it's the reason many traders abandon their plan and switch from strategy to emotion. Reason 5. Different time windows. Most people backtest specific hours, say, from 12 p.m. to 6 p.m. But in live trading, they can't always be at the charts at the same time. That means different sessions, different liquidity, different market behavior. So naturally, the same strategy performs differently. So if your backtest looks great, but your live results are terrible, don't rush to change your strategy. Your strategy might be perfectly fine. The real challenge is executing it consistently, under real market pressure. Use the replay feature and backtest at real speed. Only test during the hours you actually trade. Record yourself while trading live. Then review those moments. You'll see exactly where you broke your plan. That's where your real growth begins. Now it's your turn. Have you ever had amazing backtest results, but struggled to perform live? Why do you think that happened? Drop your thoughts in the comments. Because in my next video, we'll talk about how to train your mind to perform under live market pressure. And don't forget to subscribe. You won't want to miss it.